Good afternoon, this is Gregory speaking Forex. This is 1:09 p.m. Pacific Standard Time, May 2nd, 2012. And what I have on my screen here is an update on the Aussie US dollar trade. We are actually long, as you saw on the first video. So what am I doing here? I decided to take my first target at 103.50 area. And the reason why I've decided to do so is because if you go to the daily, you can see that we are forming a pin bar on the close of the day, and this is very bullish. But the thing about it is that a lot of times when this happens, the market tends to pull back a little bit before it goes higher, and I just don't want to take any money off the table. And if you go to back down to the 1 hour chart, there we go. So if you go back to the 1 hour chart, you can see that there's a slight resistance here at 103.50. Remember, 103.50 is a half number, so psychological resistance. So I expect the market to pause. Okay. If you zoom out a little bit, you can see that this area, just follow the white cursor, we have three bottoms that coincide with the 38% retracement level, which is around 103.50. So all of these areas are lining up as far as logical target areas. Now, if we hit this area, what I think is that the market will pull back just a little bit. I mean, not significantly, but the prudent thing to do is to wait until price can actually exceed this particular supply area, okay, in a convincing manner, and then pull back, and we go for the second phase of this trade. Now, some people trade this differently. Some people may enter the trade with, let's say, double the position, and then exit half the position once they hit their target, and then they keep the other position. There's different ways to trade it. Honestly, I don't care. To each his own. As long as you have justifications for the reasons why you make your trade, if you can quantify your trades, that's really up to the trader. So with this green divergence that we have here at the bottom, this also gives me another signal for a move to the upside. Now the magnitude from the top to the bottom is 75 pips. Okay, so what I normally do is I add the 75 to the top of the break. So if we break around 103.55, we add 75 pips to that, you're looking at around 104.30. Remember, the top of the trend channel is at 105.50. So we have everything pointing to our favor that this market is going to continue going to the north side. So but we're just going to take it one trade at a time. So I actually place my limit at 103.45, and the reason why is because normally around these half numbers and whole numbers in these support and resistance areas, I don't actually try to hit the exact pip. I always try to do a few pips below or a few pips above, you know, just in case the market stalls around that particular area. You know, because sometimes I'm asleep, I'm away from my computer. I just want to make sure I get filled on my trades. So that's what I have for right now. What I'm going to pause the video, and I'll come back once the trade is exited. And then what I'll do is later on today or tonight or tomorrow, whenever we get the opportunity, I'm going to re-enter the trade for phase 2 and see if we can hit our second target, which will be around 104.50. So thanks for tuning in. I'll be right back, hopefully pretty soon, and we'll start talking about the setup for the next trade.